Hey guys, hold on real quick. Let me just post the new link. I got my internet back up. I don't know if it's gonna stay. Uh, it does look like everything's working for the moment. Hold on real quick. Okay. So, we did get 10 points. If you recall, the last trade right before the power went out, or I mean, right before my internet went out, I got in at I think 503.75, and so I only needed 13.75 for that trade to work. And remember the idea of it, I mentioned it was just a scalp. It was a little aggressive, right? But we got what I was calling the judo flip, which is where you get a green bar. It's immediately followed by an orange bar. Like that's usually really bearish, but it takes a lot of energy. And so if it's not really bearish price action, or if you're deep in the hole and you see that, they will often push down into support or just below it and then throw a combo like this, like a purple bar, green bar combo. It's got to be a green bar here, just like this. So they got beat. This green bar got inversed and beat, and then they immediately came back and hammered it just a little bit lower. This will often come back to this level. So that trade worked perfectly. Thankfully, I had my brackets on, so even though I lost internet, it still paid me. You can hold runners if you want, but it doesn't. It's not always going to work. It depends on a bigger time frame, right? And we had already talked about that. This resistance looked pretty strong. I thought they were going to come back up here to get me short, and it just didn't reach it. I could have taken this one, but it was aggressive. Like I said, I think this was a valid try, and then it swept that stop, reversed, did the judo flip to get it all the way down here. You get the scalp back up. It's trapping back into this apex, if you see. So it got under that apex and then came right back and gets you 15 points very often. Then once that one gets reversed, see it's got pink bar followed by orange bar, which is a short. I didn't have any internet, but that on a lower high in a bearish environment is really strong. Plus, if you look down here, we're having trouble getting back into neutral. And so right there on the lower indicator, see how they got into neutral and then they're immediately rejecting that green neutral zone? When that happens, it's the opposite of this, right? You can sell rips when you see this, and you can buy dips when you see this. It's better if it's not in the neutral zone at all, but a little bit is okay, like that. And then, but definitely needs to be below the midpoint here. Now it's funny because they came back up and they actually hit the midpoint right here. I did not get an indicator to go short. I'm not shorting purple bars. It's a sign that buyers are just giving up, and it's like basically markdown, like prices are just on sale, right? But there's no sign of any aggressive buyers for the moment. We would need a star or a green bar to come back. So this would technically be a valid entry, but it's not a very good one. This pink we talked about earlier is a volume anomaly sign, and they only really work in bullish environments. Otherwise, you need a lot of range to get to your target, and your target here is basically resistance, which was put in by this pattern. So your resistance is here and your entry is here. It's just not enough. But see how they hit resistance, they immediately reject? Pretty clear sign that we shouldn't really be looking for longs, at least until you get to a good location. Now this shaded area is an area that I would expect them to try to defend. It's a better, if they get under this and immediately save it, that is probably the better long than this one. They shouldn't do it now. That would be a big waste of energy, most likely. They're trying to trap off of this one again. It's not very prudent. Just look at the big picture. Oh, you do have divergence though on the indicators. That's interesting. This just looks like a little bit of short profit taking. But what I want to see this zone get broken under, and then they come back aggressively, because that would confirm that it's still balanced, which is my base case. Is balance with a tilt to the bearish side. But remember, they never took out that low, right? We talked about that earlier. That low is still safe. So until that happens, I'm not going to get super bearish about the entire day, right? I'm not saying you can't short. You just have to have location right. But overall, it looks like a pretty balanced day. So they oops, well, what did I do here? I fucked up another. I accidentally had my cursor on another screen and messed it up. There we go. I fixed it. Okay, good. A screen you guys aren't looking at. But yeah, there's not a whole lot to do at the moment. I do have my mic on, right? Yeah. There's not a whole lot to do at the moment. But we're going to watch the close, and then I'm going to do some review. I want to look into a few ideas about structure for like a little free coaching session using the algo. So after reviewing the day, we're going to talk about structure. I may need to take a little break and grab something to eat because I got to break my fast. I could technically break it now. It's been 18 hours, but I'll push it. My stomach's rumbling pretty good, but I usually don't eat until after the market closes, unless it's a cheat day. So yeah, we're just, like I said, it would be very aggressive to take this trade. It's not wrong. It's just there's too much resistance for me. I'm not, when I get this chop, dump, and then they reject, like you can be brave and take this one. I don't think it's very smart to take it again when that one fails. Pretty sure. But these are some of the things I'd like to research a little bit, is like, at what point does this structure become untradeable? And whereas at what point can I try to get the big rip all the way up here to where the liquidity is? Because like that's what I see at first, is like, well, if this is expanding range, it could take this out. The problem is we have no evidence down here that there's any range expansion. The last sign of range expansion was this. So this was our last sign of range expansion. And you can see it was followed by consolidation, right? So you're going to have to break beyond that to expand range. Now, I have certainly seen them rate it, right? Take the stops and then run. That can happen. It's not like that never happens. So it could work. It's technically valid if you have a reason to do it. And we are at a location earlier that acted as support repeatedly, right? So I wouldn't blame you if you tried it. This green line here was found on a higher time frame. You can see that it's pretty consistently been respected, at least for somewhat of a move. If we lose that and we get under it, it could become resistance. So those levels, the green and the red, I guess they're up there, and the white. These levels work really nice. I talked about how to find them yesterday night, late. So if you look up the stream that aired December 6th on my YouTube, just go to the live section and you'll see the live videos. I leave most of them up there. Oh, they're trying to do it. That's technically valid. You could technically long that. I didn't think they'd get the trigger. They did. I'm not going to do it. It's just a little bit too choppy for me. I don't think I have enough room, but that is a valid trade setup. If you think you have a target far enough away to give you good risk reward. I think it's going to try and it's going to fail around 98 if I had to guess, but I don't know. But anyway, yeah, if you go to my YouTube, go to live, and then pick the one from yesterday, December 6th, 2022, it should still be up there, depending on when you're watching this. But yeah, I know it's up there if you're watching this live. And so you can watch it anytime you want. You can pause it, rewind it, fast forward it. I talk about how to identify the levels that are green right here, the green, and then the white one up here, which was found way back. So it interacted here really nicely, but it was actually found way back. Further, see, it interacted there too. It was found. Oh, it interacted there too. Where was it found? Interacted there, right? So the short. It came from a long time ago. Wow, a long time ago. I don't know how far long ago. Days ago. It's been there. Yeah, it's on the higher time frame. And the green one, if I remember right, was from London. Oh no, it's from right this morning. And so that was developed here. And you can see it didn't immediately maybe work, but on subsequent tests and rejects of it, it worked for pretty good longs if you have the courage to take it. And we are there again, so I mean, it only fails to work when it fails. Like, it's technically still good, but we needed that sign of aggression off of it. I don't know. Maybe it is an okay long. I have a really hard time on days that I'm like making money. I have a really hard time trading at the close because it can get so like there's a level of unpredictability at the close and the open because it's like new participants coming in that work trading all day and have a time frame that's much higher than mine. So it's a little bit of a crapshoot the last 30 minutes. It's a great time to make some decisions on like overnight trades. Like if you're a swing trader, it's a really good time to trade. Is near the close. But if you're day trading, trying to take advantage of like inconsistencies on a smaller time frame, you could get you might pick the right direction and then you get a really nice extension. But there are days where you do everything right and it just doesn't work because there's just too many traders on the other side absorbing your buy that wouldn't have been there 30 minutes ago, but now that it's close to the end of the day, they're making decisions on a much higher time frame than you. Yeah, like I said, the level was good, and the signal was valid, so I just didn't really think we'd get much extension here, but maybe because it's the end of the day, see, if they can get beyond this green zone, if they can get this over it, then we could get range expansion again. I just didn't trust it, but look, it did have divergence, which is what I was pointing out earlier. It does have divergence, right? I said that's what I mean is it's got a higher low on the indicators, but a lower low on price, and that helps whenever it's not a trade signal in itself, but when everything else lines up and you have divergence, you can usually get 10 points. I just didn't think it's gonna. What I really want, I want to take the trade that does this, right? That's the one I want. I'm not. At the end of the day, that's what I care about. Right? If I'm just going for 10 points, like I got that here already. I did that already, right? I skipped this one for the same reason as this one. I didn't think it would go very far. But with the range expanding so much, it looks like you can take those trades a little bit more liberally if you have the location there. So that's another thing I want to look at. Because this expanding range is something that happens a lot. And I'd like to be prepared for it next time. And now that I have a couple new tools, like this volume zone oscillator, and I'm starting to understand ways to use it that are different than most people use it, and the algo signals, I might be able to combine some ideas and make something useful. So, yeah, this is a good example of why you just take valid setups as they are, even if they kind of look sketchy. It was a good trap. If it's balanced, it should give you 10 to 15 points. Sometimes you get more. You can see we've now gotten outside of the neutral zone, assuming this closes bullish. And that would suggest, since it started below the neutral zone and it got over it, it did have a little kink in it. But this is, I think, worthy of calling it a range expansion. Generally, what you will get is whatever this, we can use a projection, whatever this range is. Oh, good, they got it. So whenever they make this pullback, like let's say the pullback's right here, we could make an extension and we could be relatively confident that after this pullback, like let's say it pulls back right here, right? And maybe it goes to like the 50 or so, which would be pretty natural. The next push should be an expansion, which would be up here at the 161.8 or even higher. So, and that, like I said, that was really the trade I was looking for. I just didn't think it was ready yet. And we may get the 50% pullback before the big move. So I might have missed a trade, but also it's possible to miss a trade, to decide not to take the trade and it work, yet you're still right about your read, right? Especially when you're scalping like this, it happens a lot. Where you're right about your read, you're right that it's a profitable trade more often than not, but you don't have the courage to take the trade because you don't think it's going to work. And then it works, not because you were wrong about your read, but just because the market just moves more than you expect. So you were right on your read, you were right that it was on process. The only mistake there is not taking the trade. I just chickened out a little bit because it was the end of the day. I knew it was valid, I said it. Like, you could take it if you want to be aggressive.
honestly just didn't feel like being aggressive at the end of the day. But what I will say, the warning I will give to everybody, because I'm sure most of you have experienced this, is when you think you're being prudent, trying to avoid aggressive trades, and they work, the natural reaction is to be more aggressive because you feel like, hey, I missed that trade, I'm not going to miss the next one. It's a form of FOMO that we suddenly get aggressive when we miss a trade. It's a very dangerous tendency. You just need to be aware that it's normal, but it's not helpful to your account. It's a sign that you need a more systematic approach to trading. You need to have rules for when you can be aggressive and when you aren't, and that rule should have nothing to do with how many trades you took and whether or not you missed a trade or not. It should be based on price action and structure. The market should tell you what to do, not your past performance. But yeah, now that we've gotten this clear expansion, there's a good chance that that the next couple waves here will actually be bigger. It doesn't mean it has to go higher. It could expand to the downside too. After collecting liquidity up here, it could reverse. And actually, this is going to give us pink bar, orange bar, it looks like, I think. Let's see if we get the orange. Looks like we might. Yeah. So pink bar followed by an orange bar is generally a sell if it's bearish. So if you see this as lower high, lower high, lower high, lower high, I see that, right? Then usually you're going to get a 10-point extension down. If this gets beat, it's very bullish. Because that doesn't happen very often. It would be similar to this judo flip, right? The green bar should extend higher when it's on a higher low, and when it gets beat, you're probably making a couple more. That green bar was going in the wrong direction. That's a counter trend trade that I took, right? I skipped this one. Well, I couldn't have taken it anyway because I think I didn't have any internet, and then I purposely skipped this one even though it was valid. And so now what I'm saying is it's probably bullish, seeing that this one worked even though I didn't really think it would. So it's very possible that we're going to come down here, dip a little bit, and then extend higher. I would not be shocked. But I really don't love taking trades in the middle here. If I want to be long, I should have bought this. But I also don't like shorting this. If I want to be short, I should, that's why I shorted up here. This one. That's why I took that short. It's because even this one was a little bit encroaching on the middle of the range. This one was better. In a balanced day, location matters more than anything. In a trending day, it matters much less, by the way. It might be kind of fun to compare yesterday to today. If someone has specific questions, feel free to ask, especially when we do the review. But that's sometimes a good way to learn is to compare 2 days that are very, very different. So is there another level here on this time frame? Right there. Okay, so there's a potential resistance here. You can see this one interact. Oh, wow. Yeah, perfect. Okay. Maybe this does reject. That's actually a very, 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 very solid level. It's just in the middle of all this chop. So if they have momentum, they're going to beat it and then retest it and then run. But it makes a lot of sense to reject there. A lot of sense. Sorry for the fighter jets. I live next to an Air Force base. You get used to it after a while. I forget that everybody else doesn't have fighter jets flying over them. So no, I'm not under air raid or anything. Don't worry. Just reminded on a daily basis that we've got some of the best military in the world here, who literally fly those planes every single day. So that those pilots are ready if they're needed. It's pretty amazing. All right, look at that. They're going to try to break it. Judo flip? Is it going to be green? That'll be pretty sweet. I don't know. Doesn't look like they're going to do it. Wow, look how close they got to closing that bar. So now one thing we can watch, we can take a look at the higher time frame. And we can see that this is clearly a sweep, trap, break. They're going to try to break it out, right? And so if they fail to take this, it's not going to go higher. there's this guy sitting up here waiting with liquidity up here. The target is this green zone. Okay? The target is the green zone. So on the little time frame, one I actually would trade, that's way up here at 56. High day. I did not have the vision, and this often happens. I did not have the vision for anticipating that this could turn into some kind of trend up at the end of the day. And that's why I skipped this trade. But if you did have the vision, the algo told you to take it. I just didn't see it. I didn't see the opportunity for this to expand in the upwards direction, even though it was definitely a valid trade. I probably should have taken it, just to practice taking the trades, even when I don't like it, because it was valid. But I hate giving away winning days at the end of the day. It's really frustrating. But the thing is at the end of the day, like getting 10 points with a runner that you can just hold, the chance that it actually, if you think there's a chance that it expands to high day, it may, as long as you can hold it, it may pay for the times when it just straight out stops. Because like the chances of a range expansion are higher at the end of the day when you have more participants. You just don't really know which way it's going to go. But the algo set up long, so you're going to get 10 points 70% of the time, and then just leave a runner. So I think the optimal move there is actually to take that trade. You skip the first one, and I knew that. That did not look very good, but this one was, when it comes back, when it stops that out and immediately rejects lower and instead goes higher, that's usually solid. We can also look at where all the volume was, and it was probably at the lows. Yep. All the volume on that move was at the lows. Where was the volume off the low? Way at the bottom. So if we get a dip here and another green bar or a star down there, I could actually get long still. This is actually setting up for a good dip buy. I just don't know if I'm going to get risk reward. Let's see if they get it lower. I can't really take it up here. I guess I could do it with calls. Hold on. Getting pinged. Okay, all good. Okay. So we'll see. I want it to come down a little bit and then give me either a purple bar followed by a volume anomaly, a green bar, or a star that sets up down here. I really see this little shaded orange area. I really want it to touch that. That will pretty much guarantee me good risk reward. As long as I'm right about it potentially being bullish. It might not be, right? It's the end of the day. Like, you have to accept that, like, you may just be wrong about the call, the directional call. That can happen. But what I see is it dipped significantly, sweeping this low, and also rating the stops under this low from earlier. See that? And then proceeded to break above one of these little flags and close a bar or two above it. So usually those dips get bought. Not always, but usually. The exceptions to that is when you have divergence at the highs. So this is a little bit concerning, the lower high here, but it's not on the MACD histogram, which I got looking like a line because it's just easier to read. But I like this indicator as well for divergence. And that's a very strong move. Wow. Orange bar tried to get beat. They swept above him by like 1 point, taking all the stops, and then rejected again. Closing under the voodoo range level, by the way. Eek. I remember I must have erased it on accident, but there is an important level right here from earlier that has acted. They try to use it as support and resistance, see that? But it's so choppy at the developing point of control here, where that dashed line is, that it's hard to keep it there. But look how this dashed line stuck down here and price went higher. It suggests that it's not ready to take off yet. Price went up, but volume didn't. Because that dashed line is where all the volume is. See how I drew the pink over it, right? It's where all the volume is. And so price went up, but volume didn't follow it. So it's now getting attracted back to that dashed line where all the volume is. It may not make it. I really do need it to touch down here to get long though. I can't take it up here. How much time is left? 15 freaking minutes. Okay. Let's see. All the trades I took had 2 candles. Oh, yeah. Yeah. Okay, sorry, just helping out a member. Okay. Oh, let me see if my did they take it? Oh, they did take that. Nice, good. So I'm not in the stream in the room with my coach because I'm with you guys, and you have to pay to be in the room and listen to this stream. So I'm not going to stream it for free, all you guys. You'll have to go visit the room yourself. But that means I didn't catch the call, but they did take this trade, which is great. So they took the long here that I skipped, and they're still long. So that's good. Good job, guys. That's the right move. Like I said, I just chickened out. I knew it was valid. I just didn't take it. I really want them to pull back a little bit more so I can get long, but I don't think there's going to be time. Unfortunate. But that's okay. Well, like I said, even after the close, we will review the day, and I want to compare it to yesterday and show you how the difference between an expanding range balance day and expanding range like momentum day, and how the different if you only had like one or two, if you only knew one or two setups on the algo, the ones you choose to use will depend on the day type. And so if you don't know if it's a balance day or a trend day, you need to be really selective with where you're going to trade and what you're going to trade. Once you have a read on whether or not we're balancing or not, then you know better very quickly which trades to take and where you want them to set up. Which informed me, for instance, to only take 10 points here. And if we didn't have big range, I wouldn't even have taken that trade. Right? But it probably made this long a lot better. Because even if you don't break this high, it still gives you a good profit on your first impulse move, which you could take 10 points. You could take half of your trade off, like right here. There's really no reason. And then you can just hold runners in case it keeps going and leave your stop down here. You don't move it to break even though, because that would be expected. It'd be very normal. Because remember, our entry's right here. It'd be very normal to come back and test that. And that's actually where I want to get long if they give me the chance. So you don't want to move your stop to break even. You just have to accept, you make your risk small enough that you can accept taking the loss if it comes all the way back on you. And you take that profit along the way to make sure you get paid. That's the better way to trade futures. Rather than like trailing your stop to break even and then, because if you think about it, every time you trail your stop to break even, you are saying that you think you're wrong about your entry, your initial entry, and that you think that move is done. Because to put your stop at break even means you now want to be a seller where you were a buyer. Right? So if you think it's going to go higher, if you're holding runners because you think it's going to go higher, but you're trailing stop to break even, you're basically like telling yourself, I don't think this is going to work. I'm going to position myself to make sure that when it does, that I'm going to get stopped out. And that doesn't make sense. Look how they're trying. See how they shifted this dash line up? It was down here, and they shifted it up. Now it's up here. See that? So see how it's shifting? Now it's down here. So volume is moving with price, and where that price closes versus volume is going to give us a lot of information and tells the algo what to do. That's information that's fed into the algo and influences these signals. Where that volume is compared to structure and compared to the close and the open and other things. So that will tell us whether or not we get. It'll tell the algo whether or not it should signal or not. It's like it's a part of the puzzle, right? One of many. But see how that signal just disappeared and came back? It's because it's not closed yet. They are not valid. The signals are not valid until the bar closes. Once it closes, it's not going to disappear anymore. I see how it just disappeared there? It's because it's still a live bar. So it's not a valid signal. It's just a warning to me that, hey, the conditions are potentially being met for this signal. If that's an entry signal for you, you might want to get ready and put your entry right here at the close. But I also know that until this closes, this bar might come all the way down here, in which case it's not valid. But see how it closed and now it's got the arrow? That arrow won't disappear anymore. It's there for good. And that's suggesting to me that I'm not going to get filled, by the way. It's like I missed the trade down here, and it's not going to come back and fill me, unfortunately. Because that's a sign of momentum shift, and coming after an orange bar, it's super strong. So they would have to do that. Print this purple bar, and then immediately come back with a green bar or a star for me to get long. And now I've got 10 minutes, so. Most likely they're just going to rock it or just get stuck and like close right here. But that momentum shift is way too high, in my opinion. You want to see these arrows at support. So I do not want to buy this. I'm not saying it can't go higher. I'm saying that this isn't, in my opinion, this is not support. So you want them here. This arrow here is good. That makes this support. The problem is when you put an arrow way up here and then you get under it, it becomes resistance. So it disqualifies my pullback buy. And I know that's a little complicated, but you want the yellow arrows to be at resistance and the blue arrows to be at support. When they're in the wrong spot, they can get trapped. And otherwise, it just means it's really bullish, and they're basically saying, I'm trying to make this a higher low. So if you think that it might be a higher low in a big trend, you can buy it. In my opinion, that does not look like support. It looks like the middle of a balance range. And it's taking them so much effort to keep this going up that they have to do things that appear to be shifting momentum that you normally only see as at support. So either it's really bullish and they're going to totally explode this, and you just had to be kind of like have a gambler's mentality and say, hey, they say they're twisting momentum here, I'm going to follow them. And if it works, it works. And if it doesn't, it doesn't. That's either what's happening, or shorts are fighting this so hard and absorbing so much of this buying, and yet buyers aren't giving up, but they're using bullets that they usually reserve for spots down here. They're using them way up here. So it's dangerous. What it tells me is if we do get a lift, it's probably not going to last very long. And once they get under this guy, big trouble. So that's something to watch. I do have some bigger positions on a higher time frame that I need to keep an eye on. So if we get a nice spike here, I may take some profits on that. Let me just double check what we're doing here. Yeah. I really should have taken them open, because I got them at the low, near the lows yesterday. And now they're back to basically where I bought them. Yeah, and like I said, I should have just taken it off. And I actually had an opportunity to take more. I didn't get out of all of them. When we came back up there, like I took some off there, but I didn't. What I should have done is taken some off at the open, and then emptied the clip when we took that out, recognizing there was a balance day. Instead, I ignored the one at the open, figured I'd wait, and then when they came up and tested and rejected it, I'm like, okay, I guess I have to get out of some of these. But then I held runners, and in the meantime, the market's done nothing. So it's like, okay, do I really want to be long, like, runners in this environment? Like, not necessarily. It's not wrong. It's just the chances that those runners get stopped is much higher past the close. So if they give me an opportunity to get out at a profit, I might just bail on it. We'll see. Let's see how they close. If we can actually put in some momentum, that'd be great. But if we get under this guy, I'm just going to bail on him, because that's a sign that
they, like I said, this balance zone is probably too heavy. But who knows? Maybe this is the higher low and we're going to leave this area. Like, it's possible. Do I think that's going to happen? No, but it's possible. And I hate dropping positions when I haven't actually stopped out on them. Like, like I just talked about how how wrong that is to exit at break even. But there are situations where, you know, when you recognize that you've made a mistake. Here, I'll show you on the other. Let me just make sure that this makes sense, because I realize I'm kind of contradicting myself. So if you're trading a small time frame, right, and you're thinking it's long, it's going higher, I'm getting long here, I want to hold runners, you can't move your stop to break even, because this is often going to come back and take you out and then run on the times that you're right. And the times that you're wrong, it's gonna take you out either way, right? So you don't want to miss the times you're right, and the only way to miss the times you're right is by moving your stop to break even. Well, once you've made a mistake, if you identify that, like, hey, I should have been taking profits here and been getting out of runners here, but instead I ignored this one and I took profits here, but I left runners on, and the market did nothing, and they're calls, so like I don't have a lot of time on them, and every day that it sits here is costing me money. So if I think there's a chance that this was the high and instead they're just going to chop around here and roll over, it kind of if you can get out of that position at this point, this is where taking your trade off at break even or just a little bit above break even kind of makes sense, because like I said, holding it would cost money, and you made an error. I made an error by holding it. Like, they're basically giving me a free shot at getting out of my trade that wasn't working. So if that's the way you're looking at it, like, hey, this trade is not working, I want out of it, and they give you a chance to get out at break even, take it, right? Just move on to the next one. But if your trade is working and you're afraid of your runners stopping out and that's why you're moving to break even, you're probably not getting the best out of that trade as you can. You're probably missing a lot of extensions that you should be getting, and it might actually make the trade invalid overall, because because keep in mind that's your MFE, right? That's your maximum favorable excursion, is whatever you're getting out at by default. So you're missing out on all the times it comes back in, stops you out, and runs. And your maximum favorable excursion is basically what it does before that. So if you're getting into the trade thinking that your target's up here and your stop's down here somewhere, and you're like, hey, I've got 5-1, I can take that trade. Actually, your target's here, because every time it gets here and comes back to your break even point, you're getting stopped out. So your MFE is actually here on that trade. So you're only getting 1-1. Even though it looks like a great swing trade, you're never seeing that extension, because you're moving your stop too early. So that's when you don't move your stop, right? But when you do move your stop is when it's like, wow, I fucked up there. I made a mistake. I should have been getting out of my trade. And then, hey, look at this. It came back to break even. This is my chance to get out before it actually rolls over. That's fine, right? You're just seeing it as an opportunity to get back out of a trade that you probably should have been exited already. Maybe you gave it a chance to work, but you don't believe it's going higher anymore. Now I'll get it out of break even. But I don't think there's any reason to think that just because this pulls back to this level that you're automatically wrong. Just because it goes back to your break even point. Assuming you had more than 3 minutes to go in the day, I think that's okay, right? The fact that you only have 3 minutes in the day, maybe I just trail my stop all the way up here, because now it's like, look, if you reject here, it's just done, because there's only 2 minutes left. But remember, yesterday we ended with a spike up, and so there's certainly also people in the exact opposite situation where they shorted the lows, and they're nervous that spike is going to happen again. And so if they can build momentum here, like I said, that blue arrow is a sign that they're trying to make that the higher low. I don't think it's going to work, but I've been proven wrong before. But to me, this just looks like balance, and that's why, I just kind of want out of that trade. It's a time frame situation, right? The question is what's your time frame on the trade? Fuck. Okay. So let's go ahead and get rid of those calls. Hurts, but it's how it goes sometimes. Sometimes you just make a mistake. Oh, come on. Come on back up. You're kidding me, right? It didn't fill. That's fucking annoying. All right, let's see if we can just slip down a couple ticks and maybe get... There we go. Thank God. Okay, so I don't know if that was the right move. It might just run now, right? Then that's okay. I'm literally just avoiding a stop because calls cost money to hold overnight is the way I look at it. So I will happily miss all the times when it continues higher tomorrow in exchange for not taking a loss on a trade that I thought was working today. Because like I said, my thinking there, I bought down here and then held overnight thinking like, hey, if we gap up, this could easily retrace all this, right? It went lower overnight, but opened back inside of the range. So I'm like, hey, I'm holding. This bottom, this low might hold and we continue higher. We're good, right? It spiked up. I considered taking profits. I didn't. We came all the way back. And then we came out and we took that high out, right? I'm like, oh, finally, the trade's freaking working. And then it started pulling back. And I'm like, oh, it might not be ready. I should take some profit here. But I only took off a portion, right? And I was like, if we just dip and then rip, all good. Trade's not invalidated. I've got plenty of time in the day. Well, what did they do? They came back and they just balanced here all day burning theta. And like, I could have made like $200 some per contract here more, and instead got out at break even just because they closed right back near just a little bit higher than where I bought it. Because I bought this break here. So and so it was basically out at break even. I actually took a slight loss on it. But a very small one, a paper cut, right? And I'd made money on the first half. But the question is, well, it didn't stop out, right? So why get out of the trade? And the problem is if we have another day where it sits around in here, it's just going to cost me more money to hold it, right? And they expire in 5 days. So every day I'm holding it costs a lot of money. And because it's balanced now, there's a relatively good chance that tomorrow we could actually get an opportunity to trade in either direction at the edges. We might get a chance to sell up here again, and we might get a chance to buy down here again. And we could actually be creating an extended trading range that's expanding here. And if that's the case, maybe I should have held them, but there's also the chance that we just drop. And then it would be, it would take out all the equity, and there's very little chance that I would hold them. I'd stop out on them, right? I'd take a max loss on it. And so the way I looked at it is I made a mistake not exiting all here. Or at least I knew it was wrong by the time they rejected this. So I probably should have just gotten rid of my runners here, but I didn't. I held them. And when they can't get out of this zone, at the end of the day, I'm just going to take the small loss and be fine with the trade as it is. Because what I really wanted, the only reason I bought down here was for the chance that it might do what's called a spring. And it didn't do it, right? Like it literally, the trade I planned did not work. Yet I still got paid like $200 on half to get out early here. It's just that the runners didn't do anything. And I just don't have time on my side to wait for that to happen. Okay, let me quick put it on pause. Okay, I'm gonna go grab a protein bar, and break my fast, run to the bathroom, grab another drink. It'll be 2 minutes. I'll leave you with the music. We're gonna come back and we're gonna review the day, and we're gonna compare it to yesterday to see if the same trade setups were working or if different trade setups were working. Because I'll give you a hint, the 2 days were very different. The price action yesterday was slow bleed, right? Trend down, slow bleed. Today it was bounce. And what you'll see in a minute is that the trades that worked yesterday didn't work as well today, and the trades that were failing yesterday worked great today. And that's just the way it goes. And the reason I'm doing this is not just to show you and explain it, but also to research it a little bit and see if there's something I could have noticed faster to cue me into it, maybe even overnight, so that I can be more prepared next time. I didn't make a huge mistake, but I took one stop that I think could be avoidable. And I will show you where that is and share my results and everything. So I'll be back. Give me 2 minutes, guys. I will leave you with some music. Here, let me just, in case someone's coming in. There we go. All right. Let's see. We'll give you some music and we will talk to you soon. All right. Sorry, guys. Didn't realize I left my mic on. Didn't mean to chew in your face. Okay. So, let's take a look at this. Oh, for those of you who are just joining by chance, this is how you get a hold of me. So, on Twitter, I'm at RedBenTrader. You can follow me for all sorts of ideas and all the streams. I always post there. You can also watch for the voodoo range levels I share every weekend for the next week. And those levels can be watched for possible trade entries. Then, in the bottom is access to the paid trading room that I participate in. I do not run Trade and Perform. My coach does. So, if you want to trade like me, you should don't learn from me. Learn from my coach, right? He runs a room. He also does private training, coaching, like serious future traders who want to be more consistent and more systematic. And his process is really great. It takes a little time to get used to it, but if you want to see what we do, give an email to Simon, and his email is trade, letter N, wordperform at gmail.com, and tell him that you follow me and that I promised you a 5-day pass to the room. He'll happily oblige and answer your questions after you get a chance to sort of watch what we do. So all I ask is that if you do come into the room, just try to be respectful and just absorb, right? Like, don't be too overwhelmed by the fact that like everyone knows what they're doing except for you. Like, it's not a call service, right? You're not just going to be able to jump in. You don't want to just take trades because people are saying they're getting long or that they have a valid setup. Like, you don't know how to manage the trade, so please don't try to like trade with us during those free 5 days. Just take notes of questions you have and just try to see how we all work and see if it's something that you think would benefit you. And then Simon will teach you what to do after that, right? So the 5 days is not necessarily to learn the program. It's just to see what we do. So if you get too stuck with like, oh, this is hard, I don't understand anything, like, well, of course you don't. Like, you never, you're brand new. Like, it takes a while. So, but yeah, feel free to give him an email. Let Simon know that I promised you 5 days. And I'll see you in there. So, let's rewind. This is NQ. We could also do ES. We're going to rewind and look at overnight. And then I want to look at today and compare it to yesterday. Okay. So, all right, so there's the open. Wednesday open. I guess, yeah, this will make more sense if we, rice longs. I must have pointed something out on another time frame. Okay, so let's start quickly. We'll review the overnight. What you'll see happened into the close was a big squeeze, right? Big squeeze into the close. And overnight, we started to develop, you can see this level here I found it on a higher time frame. Then they eventually worked their way under it. This was the primary entry. If you want to learn how to get the white levels, there's a stream I did yesterday night that tells you exactly what to do to find them. And it's nothing secret. It's something that everybody can find. Okay. All the other zones are based off the profile. Short number 2. Again, keep in mind these signals are signs of aggression. You don't have to know what they mean, or that you don't need to know how they're built. But when you get these orange bars or stars going down, interacting with this level after we get under it, those are pretty good shorts, as long as it's a bearish environment. Now, take a look at where this is happening. Oops. If you look back, structure is so important in markets, you guys. If you look back at the low, right, this is the low of the day on Tuesday. And we look at where all the volume was from the low till this, where would you do it? Probably doesn't matter, but let's do it to the high. Okay, all the volume, well, the majority of it, was up at the high. See that? So, in other words, there was some volume down here and some volume in here, but after this move, the majority of the volume actually came in up at the highs as they tried to attack, the shorts tried to attack it and buyers tried to defend it. That's where all the volume came in, okay? So, see this shaded area here? That's we're gonna say that's it's a little hard to see. I know there's lots of things going on, but there's like that shaded gray. Here, I'll color it a different color. Fill color. We'll make it. Can you see that?
No. Let's see. How about blue? There we go. Okay. So, all right. So it's all the volume came in up here. Okay. Oh man, they look exactly the same as the green one. Sorry. The green is actually old single prints that have been fixed, but they continue to act as support resistance. We can probably remove it now, actually. Okay, because they've clearly been repaired now. So this is where all the volume was of this spike, right? At the end of the day. Look what happens when we get remember, orange, every signal except for the pink and the purple are basically aggression, just measured in different ways. But here the orange bars and the red diamonds or the yellow stars that interact with this level or this range here are going to give you relatively good reactions. See that? Because we're rejecting all the volume. We got under it here, and then as we come back up, that's when this level becomes important. You don't really use it here because you haven't really rejected it yet. See, they kept trying to go up. They try to hold it. Purple bars underneath it is just a sign that buyers are like giving up, but then they immediately come back with an aggressive buy. So the reason I want to even point this out is this is a very, very common reversal pattern, okay? Where you get a big spike in one direction, and what it looks like is what we call an impulse move, right? And what it looks like is on the volume zone oscillator is it's gonna be a push outside of the green neutral zone. So when it's a bullish impulse move, it'll blow through it, and then it'll get to this red or even the yellow, what they call overbought levels. And even when they pull back, the midpoint or near the midpoint, or else maybe even the green zone itself, will start to act as support. That is the sign that you have. Oh, and then if you look at volume, the volume here, right, becomes much more significant than the gray down volume. Remember, these are cumulative volume waves. So like there's no real significant volume on the downside. Whoops. On the downside, it's very, very little volume compared to what the big push was, right? And where did that big push end? Right here, right where all the volume was on that volume profile, right? So this becomes the area that needs to be defended. Now, the thing that people get confused about with defending support resistance zones, trading under a support zone, if it's based on volume, is not abnormal right after it's put in, okay? And this is, if you can understand this, you guys, the way you picture price action will change. So if you don't know this yet, I want you to really think about this and how the market works, just how auction works. When there's a lot of volume coming into a market, okay, whether or not it's down volume or up volume, the regular reaction, and it's pretty much meaningless at the very moment, is after that volume comes in, the market's going to want to retest wherever it just came from. So they put the big volume in up here, and then they're going to retest. And then what matters more than anything is what happens on the opposite side of that volume. So if the volume, see this little pink, purplish diamond here? That's an indication that there's a volume anomaly in there. So either a really big trader or volume delta divergence, things like that are going on in that bar, okay? And then the star is a sign of aggression as well. It usually has quite a bit of volume as well. So both of these bars probably created all of this volume, this blue, and then the pink is where most of the volume is on this entire wave up. So there's more volume in this little bluish, greenish area than there was all the way back here and here and here, right? But what's normal is after they put in a bunch of volume, it's totally normal to pull back underneath that, test back into like an old support new resistance, or maybe a low volume node, or a moving average, or VWAP, or whatever, and then bounce with more volume. So see how we get the pink here, right? So another volume anomaly here on a higher low causes the market. Here, let me just zoom in here because I got it far away here. So this volume anomaly produces an extension higher. That extension gets over the big volume seller, right? The volume seller with the volume anomaly, we got over him, right? We don't have any read. There's no reason when it's here. You have no reason to be bearish. Is what I'm trying to explain. There is no reason to be bearish yet, even though you've seen a big volume seller or a volume anomaly seller and a big volume buyer and traded lower. There is no reason to sell this. Do not sell breakouts following big volume. I know that that's what you're taught to do for trend following, but I promise you, when the trend is going the opposite direction, when you got an impulse move going up, if you get a big volume bar up there and you try to trade a breakdown, it's not going to work, because it's very, very normal in an uptrend to put in big volume and then to go to basically have that big volume be tested. They're going to test underneath this trader, with this aggressive trader. They're going to test underneath him and make sure that there's still traders interested at that level, right? Because remember, all the volume was up here, right? These guys, the pink bars, there's probably barely any volume there, because look at the distance it had to go before it actually put in volume. If you look to the left where all the blue is, it's kind of hard to see, but that's kind of on purpose, so it's not too distracting. There's not a lot of volume underneath this little spike, and there's like a big hole here, right? So there's no volume here. Look what happened when there's no volume. They dip down into it and bounce, right? No volume, put in some volume, dip back into the low volume area and bounce. That's normal. That's just what it does. So just seeing a big volume player or delta divergence or any kind of volume anomaly followed by a continuation is not enough evidence to reverse a trend. Is that what it's going to look like when the trend eventually reverses? Maybe, but that alone is not good enough. It's also very normal to test behind them up here, right? So what we should expect when we see this, as soon as we see the volume anomaly bar, that diamond there, as soon as we see the pink or purple diamonds, our expectation should be we're probably going to trade above and below it. Usually in the direction that it's pointing first and then the other, but not always. So we would expect it to go back to the poorly auctioned area, the pink, and up to wherever resistance is, maybe the yellow, right? They come down, they visit the range with the pink, they test under him with a wick, right there, and they respond with a big volume bar. That is bullish. That one you can buy. Don't buy this after the big volume, right? Wait until they try to break it and take advantage of all of these early sellers who are selling the breakdown. And as soon as you see that volume come back into the market, now you can buy it, right? Don't buy this one, buy this one. Now, what we should expect is that they now push higher, but once you get over this guy, there's liquidity sitting up here. All of the stops, right, of the guys that got short on the breakdown, their stops go up here. Once you get that liquidity, that trade is done. The only thing left to do is to determine whether or not the trend is going to continue or not. And just remember that we never actually know if a trend will continue until it happens. And what I want to know is what are the signals early on back here that the next dip that comes in we probably shouldn't be buying. That's what I want to know. So let's see what happens. So this is our high volume area. I accidentally moved this profile, so I'm just going to delete it because it's useless now. So we got all the volume here, traded under it, They responded with a volume anomaly. That's going to create a buy opportunity. They push above this volume anomaly, which is totally normal to trade up here. If it was bearish, the reversal would be right here. Okay, if it's bearish, oh shit, I lost it. If it's bearish, my bad, guys. It was like, I guess I should draw it again. I don't remember. Let's be exact. If it was bearish, you'd expect this to be the high, okay? And it might be, right? But that would be very normal, is it took the liquidity and then reversed. So I'm going to mark off where all the volume was before that little low volume area, low volume node. We're going to fill it in with like blue so you can see it. Okay, cool. So if I bought this, but first of all, you do not buy that. Do not buy, right? After you see the big volume, do not buy until they pull back. They try to take a key level and they reject. They get big volume right off of Voodoo range level, right off at previous close, or no, previous low of day. They get this big volume bounce off of it. Yeah, you can buy that for a scalp, but just realize that once you get to the liquidity point, you need to get out of the trade, right? So any of these is fine for exiting, in my opinion. Now you wouldn't necessarily have to get out of the trade, but you have to at least evaluate whether or not you still want to be long. So here is my first guess for how to determine whether or not we should stop buying dips. Number one, the MACD histogram, which here I have as a line since it's easier to read, but it's actually the histogram, is making a lower high, yet price is making a higher high. Okay? So natural bearish divergence is the first clue that says, I know price looks bullish at the moment, but there's less momentum here than there was back here, yet we're making a higher high. How are they going to sustain that? It should be our question. The volume zone oscillator is also making lower highs as this is making higher highs. So that's also divergent. Hint number two, after getting above the neutral zone on the volume zone oscillator, which is bullish, and what you usually see during trends to the upside, it's very normal to come back to the midpoint and find buyers. We've talked about that. You can learn more about it in the stream I did yesterday. The expectation then, if you were still bullish, would be to come back up into this black area and probably get over this red line and maybe even reach the yellow line, right? Make higher highs, but at least not give up that zone, that black zone is what I'm finding. So you can see they rejected the green zone here and went higher, right? That's your first sign that it's still bullish. It happens again here. They try to get lower and they reject higher. They try to get lower and they reject higher. Uh-oh. They can't stay above the green, and instead they fall through it. So notice the difference, and it's nuanced. But here, when it's bullish, you got a dip, a bounce, and then it dumps through midpoint, right? And there was a bunch of volume on this. But yet the volume zone oscillator goes sideways. What does that mean? It means that there's about an equal balance between buyers and seller aggression in this little zone here. This guy and this guy basically cancel each other out. The seller was a little bit stronger than the buyer, and that's why you got the lower high here. But more or less, they both just had really big volume candles that didn't really move the accumulated volume aggression, which is what it's showing. It didn't really move that a whole lot, right? Just a little bit. So then what do? They gradually come down. They test underneath the midpoint. They make a lower low compared to this low. See that? on the indicator, but the price made a higher low, and so that's hidden divergence. And during a trend only, you're going to get continuation of the trend when that happens more often than not. So that is how you would maybe guess that this one might be okay. And note that by the time you had this, you had already recovered the 50, the midpoint, the 0 point. 0, not 50, the 0, right? You had already recovered the 0 point. So you knew it was bouncing at the moment, right? And so by that kind of confirms that if you already had the algo setting up and you were okay with the location, which we already talked about, it's also at a voodoo range level, that is probably a good time to buy. But look what happens here. You get under the black, right? Back into the neutral zone, which is fine if it's balanced, but really shouldn't happen very often when it's bullish. You can see when it's bullish, it's very hard to get back into that green zone. And when you do, you're usually going to the midpoint, which isn't always bearish, but it's probably not going to continue higher for much longer. What's really not bullish is the bearish divergence with the high that can't get back into the black after just being there. So it's not necessarily a short, but if you did, it's an aggressive short. The short can come once you've done this, rejected, and broke below the 50. Now, shorting makes sense. But note that this low and this low are very close. So what does that mean? Well, it hasn't moved back up yet, so it's not divergent, but it means that your target needs to be below this. And if you don't think that's realistic for some reason, you probably shouldn't be in the trade, because if it can't get under there, it's going to be hidden divergence and you're just going to get another extension. So in other words, these distances should be kind of close. Notice when it got underneath here, you look at what I'm trying to compare it to is this. Notice here you didn't even get to the 50% point. Once it gets down there, it's here, right? And so now you look back at the previous low and you're like, oh wow, I'm already below that on the indicator. Where was that low in price? Oh wow, it's way down here. Look at the distance I would have to go for this not to be bullish hidden divergence. That's unreasonable. It's going right through a low volume node. We used it as support, right? After breaking over it, we retested it. That's probably going to hold on the first test. Yet we're already beyond the 50 point and coming into this low here, on the indicator. So chances are that's not going to go, right? It tries, it bounces. But now look at the difference here. You've already gotten down below the 50 again, so it's an acceptable sell, seeing that there's a retest, or the breakdown and retest of the green levels, even more evidence that it might be bearish. But what's so much better about this one is that the next apex, the next swing low with these little flags on it, they're nearby. See how close these are? Right? They're not super far away. They're not that far. And so it's reasonable to think you might start making lower lows, which means that hidden divergence is going to go away. Now, the algo, if you know nothing about reading volume or price, the algo still told you pink bar followed by star down with the volume anomaly. That's usually bearish. So you're potentially going to get at least a scalp, and if there's a chance that the read is also bearish, and the location is bearish, you might actually get a swing trade. And so that becomes, I believe, the high. Notice they try to save it here. Whoops. They try to save it here, right? We talked about this just before. Like, this is hidden bullish divergence. See that? So they tried to save it again. And the hard part about this is that, in my opinion, that buy is not as good. And the reason I believe has nothing to do with this indicator now, other than the fact that it's already rejected there, and it spent quite a bit of time underneath the 50 point, the zero line, the midpoint, and we haven't broken back up. Remember, back here, by the time we got the signal, we'd already broken back up above it, right? There was not a lot of aggressive sellers that followed through. Well, when we get the signal to buy here, it had not broken back above it. Okay, so that's problematic. And then plus, look where the aggressive signal happened. Look where it closed. Right at where all this volume was. Remember, right away, It's normal to get under that and over that, right? That's normal. Once that little move, that little S curve has happened, it's no longer normal to get under here because this volume needs to now hold as support. This one almost makes more sense to buy from a structural point of view and a volume point of view than this one. Even though this one has a better location, like risk reward wise, it looks better. But structurally, after this, now it's not pretty. Like this one still has the divergence, and I'm not saying it should be a buy, but this is where you would expect them to bounce if this was super bullish. And they basically come down, they break that low, and they try to trap back in on it. But this closed, you can see they have another volume anomaly, and it's happening right in the same spot as where all this volume was. So it's just fair price. And it's not the kind of place we want to get long or short. We don't want to be trading at fair price. We want to be trading when fair price is rejected. Okay, so we're going to skip it. Notice by this point they have broken above the zero line. Keep calling it 50%. They've bounced it out above that. So you could say, oh, it looks like it might be bullish, and that's possible. It's probably balanced, but let's see where it gets to. I would not have bought this personally. It does give you 10 points, so it's not wrong, right? We had a level here from way before on a higher time frame that indicated, like I said, that if we can start rejecting out of it, that we could get a roll down. You can find out how to build those levels from my stream yesterday. And it comes off of this indicator here. And if you see, all we can do above it is put pink bars, and then immediately after that we're rejecting. The pink bar is a sign of weakness, okay? It's a sign that people are giving up on their selling, and we're getting markup on price, but no aggressive buyers are really following it. The only time it's bullish is when it's followed by a bullish bar like this. And that usually happens after a gap or at big impulse moves like this. This is bullish. If it's pink bar followed by a bearish bar, it's not bullish yet. See that? Pink bar, bearish bar, not bullish yet. Pink bar, bearish bar, not bullish yet. You need to get above these guys where sellers were giving up before you can really be sure that we've taken that level, the buyers have taken that level. Instead, what they're just doing here is they're oscillating around the high volume node, which is really normal. This VPOC, this micro composite VPOC, it becomes a what do you call it? Like a pivot. Once one side or the other gets control of it, which just hasn't happened yet. All you've got is purple bars and pink bars after the initial S curve, which is normal. Remember, the initial S curve, you don't use this little move for analysis of that level. It's not active yet. You need to get under it and get over it. And then you need to see them bounce it. Like this is over it right here. You need to see this bounce to be bullish, or get under it again and then see it reject. That's how you use those levels. You need to get over, under, and then over again, or under, over, and then over, under again to really make it work. It's just an important way that, especially the NQ, it's just the way that volume is handled on these futures. So they get over with just a pink bar, immediately reject it with big volume probably, or maybe a volume anomaly. And notice we've rejected the midpoint after testing above it. Definitely not bullish, at least balanced. Should we be taking a trap if it comes after this? In my opinion, no. Because now it's the range is probably expanding to the downside. We had divergence, and there's not going to be hidden divergence because we've broken below the most recent apex, right? So I would personally not be buying this. But it does give you a retrace back to the level. If you are going to buy it, your target is the VPOC, right? But what I'm saying is we should not expect this to get broken. So if they push down hard enough and then bounce, you can get 10 to 15 points and just target back into the VPOC, and it's not too bad. I personally wouldn't have taken it. I would much rather, now that I know it's bearish and we've gotten underneath it with something more than a purple bar like this. In fact, yeah, this one's got this high has no physical contact with the heavy volume. Now I can take aggressive sells at the white level even though it's got high volume there, it's already been claimed by sellers. That's your trade. Short that. Look what it looks like here. It got back. It's orbiting the midpoint, waiting for sellers to or buyers to take over. They try to save it with a high volume or volume anomaly bar with aggression. It's immediately beat. If you're really aggressive and you see that combo with the star or the diamond, that's immediately beat by one of these diamonds or the yellow bar. In this case, you got all three. It's a great signal as long as you know it's bearish. As long as bears have taken control of a level like I just showed, it's good. It also has hidden divergence. See how the high on the volume oscillator is higher than this high, but the low is lower. That's bearish. So even though I would have preferred to short here, if I would have taken 10 points and thought about giving it up, I would have re-short there. Okay? It's worth shorting again, and you put your stop above this white level, right, that we identified earlier. Once you've rejected it, it really should not get above this, and now it really shouldn't get above the white level at all, because this high is below the white level. So that white level should be safe. It's been rejected thoroughly. Note what they're doing every time the buyers try to save this. They're putting in these pink bars, these pink diamonds. So they're requiring a ton of volume aggression. The pink diamond plus the white star means that they are pushing really hard trying to save this. And what that means is when we get under them, it's probably going to be a pretty big move. Note sellers come in with that same signal in the inverse. They try it one more time. This is the problem with trading near a high volume node, is you get a lot of this chop. That one's a valid sell too. And then there's the valid add, is the yellow box. But see, you could make the mistake of buying this, or like you could buy this and get, this one would get you a little bit, this one would get you 10 points, this one would stop you, right? But if you're trading on the wrong side of this, you can still make some money. But the real trade here is identifying, in my opinion, is identifying that the shorts rule that high volume area, which happens right here. They now take control of this. And the tricky part is the market comes back there to test it, because that's normal. Once, like I said before, once you get these, see there's a high volume here, and there's a volume anomaly, and there's a high volume, or in this case it looks like volume anomaly here as well. And so what's normal? Get over it, get under it, come back to it, and reject. That's just the pattern. I wish it was as simple as just get under it, but it's not. That's just not right. And so same with this one. It's like, okay, I see this, I want to be bearish. Don't be bearish until you see what happens when they test over it, right? They have to reject it. And then when they get under it, they're probably going to try to gain it back. But you can reject out of that. That area becomes a pivot now. So you can start taking shorts there. You don't want to take longs there unless you did the exact opposite, where you tested below it, went higher, then came down and bounced. Then that long works. That's not the pattern here. The pattern, you need to see the difference. And if you can't see it, you gotta learn to see it, because it makes a huge difference. Now, I've got indicators to help me find these things, right? And you can hopefully also, if you can't see the price action, look how you're making higher highs on the indicators and lower highs on price, right? For that one, and then it happens here as well. Higher highs on indicator, lower highs on price, right? That's a hint. It's not a trade setup, but it's a hint of what might be going on. And then the other big hint is, remember, buyers are trying to save this. See how they got it up above, and they're trying to keep it above the 50%, the zero line here? They're trying really hard to save that, right? But it's neutral. See how it can't get out of the green area? It's not bullish. When it's neutral, we should be targeting resistance and buying support. Support and resistance here are just too close together for me to get enough money, enough range. And so you end up, even though the trade quote unquote works, it goes in the direction you expect, it gets stuck, right? So you need something more than a balance trade, mean reversion trade here. You should only be taking continuation trades here. And so and then the other way to figure this out is to go to a higher time frame. What's interesting is on the same exact chart on a higher time frame. Look, this is the same exact spot. hold on, let me back up right here. So it's one before this. It's this. This is what that chart looks like on the 40 tick rather than the 24. Even if you don't understand anything about the algo, I think you can see that price is going from the top left and it's coming down, right? It did try to make a bottom, but you can see that resistance was clearly inside of here. All these little green lines are heavy volume, and you can see that they're rejecting it when they hit it. And then look at volume zone oscillator. It spent a ton of time at the lows, right? Rejected out of the neutral zone, that's bearish. Came back to midpoint, set up long. That's a good setup for a long. And where's the target? The opposite side of neutral. That's what happens in balance, right? You just get these nice little range expansions. And then, but then what happened? Well, if it's bullish, what happens is they hold the low, right? They try to hold the low. What should happen next? The 0 point should be broken, and we should get above the neutral zone. Nope, they roll over and get under the neutral zone and can't even get back to the midpoint. Is that bullish? No. Okay, again, that's not a trade setup, okay, but it should be a read. If you see that and you're like, wow, these are making lower highs and lower lows, and all the volume is only aggressive when they short. The up moves with the volume anomalies aren't getting any extension. They're not breaking through resistance. This resistance here hasn't even been tested. You can see it's still green here, which means there's a heavy seller that they couldn't even reach. Why not? Because there's all this heavy sellers here too. Okay, and so even though you might say like, well, that's a bullish bar and purple bar diamond, I thought that was bullish, just like this one, and this one got a 10-point plus extension. Why can't I take that one? It's like you're testing fate there because it's not bullish yet. You know, it's still bearish, and so when you get that, you know for sure, pretty much, that it's going to reject, and what that looks like on the smaller time frame is this. And so by the time you get this and you've given up that 50 point without making it to the opposite side of the range, that balance is probably going to go the other direction. It's probably going to go bearish. If you take another way to see this, if you look at the lines, it's a special moving average. It's a moving average that's been adjusted to work better with Renko bars. And what you'll see is they respond relatively quickly, but what I'm looking for is like the distance between them and their behavior. And the pink one is the fastest one. And so when the pink one starts stops going in one direction and like making higher highs and higher lows, you know that the trend has pretty much ended. And so that happens right here. See how it's no longer trending up, but instead flattening out? And we're getting a pinch of all the levels right here. See how they all pinch together? That pinch usually results in an expansion, in an extent, in a bigger move. That's when balance ends, is after that pinch. And so they fight it for a bit, right? They try. It continues to balance. Note the little levels, the little lines, the little moving averages are trying to spread out here, but then they pinch again. See the little pinch? They're all coming together on this bar. Pink bar, orange bar, or pink bar diamond, as long as you go in the right direction, is a great short. See the pinch? All the lines all together. That is the sign that you should be taking trend trades, trend continuation trades, as long as you know what direction you're taking. And so that bearish move pays, right? And I know it's a lot easier to do this in retrospect, but I think it's helpful to like practice, you know? So then, do I want to be buying this? No, because we got underneath the neutral zone, right? And so now to get a buy, what I need to happen is to get above the 0 and then come back down, try to get below this, but fail before they break down from support. They've already broken down support. It's not bullish. So instead we can say, well, when do we want to be bearish? Well, it's already bearish, so you just need continuation trades. What's an example of a continuation trade? Pink bar followed by orange bar. So if you took this pink bar, orange bar continuation trade, great, right? And then if you still have runners, you can add back if you want. Just be ready. If they bounce it, you got to get out, but it's bearish, right? Notice they have, oh, no divergence. It just couldn't get out of the green area. Came all the way down. Notice here they did get back into the black. It's probably still bearish. I'd take some profits on that with this profit taking, but you could probably hold runners. Let's just do this one at a time. Oh, they get another signal, another star to go short. Notice now all of the lines are separated and trending down. Do not buy. Don't do it. Don't try to guess the low. So this star becomes a good, and especially when it's blue square star, that's really good. Okay, they trap a seller here. So this yellow star, it's an aggressive seller at the very low. You don't know for sure it's the low, but it's really far away from price action, right? And look how deep we are here on the indicator. So since we're below the yellow line, what you can do is you can actually back up to the yellow line. I showed this yesterday in the stream, and you can see where we cross the yellow line, which is right there, that purple bar. You can put a marker on top of that purple bar, and in the future, that bar, that line is going to be very important. So drop that. Okay, they do star, star, right? Star down, star up. Probably a pivot here. I'm not personally buying that pattern, but it's probably going to pivot. They get over the level, they come back and test the level, and they get an aggressive sign out of it. This is range expansion. It goes from the very bottom all the way to the very top. Range expansion. So the if you were holding runners, be done with it. If you were waiting to buy because you thought it was too bearish, now you can start taking your high odds trades. Now you can start looking for trap back in. You can start looking for all of those balanced trades because chances are the market phase is shifting. It might only be temporary, but for the moment it's going to shift. Also, stop taking continuation trades short. Do not short that because you've got this huge expansion and you've gotten over the point where everybody got really, really bearish, which was right here. So once you get over that with volume point of control, that dash, stop shorting. Okay, so now once they've gotten above it, if they come back and defend that level, it's technically a buy, but only if balance continues. So if we change phases quickly, we could go like consolidation, then extension lower, and then you wouldn't want to buy it. But there's no reason to think it's bearish at the moment after this range expansion here. Okay, note they get above the neutral zone, so that's bullish, but they can't break this apex. Not bullish yet, right? So structurally, it's balanced. But the tricky part here, and this is what I was trying to get at earlier, it just took me an hour and a half to get here, is that the range is expanding, yet we're going in two directions. It's completely different than yesterday, which was range expansion in one direction, just a slow bleed down without any rotation going the other way. Here you're rotating, but you're rotating very, very slowly in really, really big ranges, right? So when it does this, you really want to avoid taking trades in here unless you've developed some structure to work off of. Other than that, you want to be selling up here and buying down here, and really that's all. And you really want the trap back in. You want the reversal trades, the head and shoulders kind of setups, right? But to both directions, as long as it's in the right location, those will work. Continuation trades in the middle of this zone are less likely to work, just like this one failed, right? Now, the star did produce an extension, but that's because of where it is. It came back to this level and bounced with aggression. That's why that worked. Having a star on this level is going to work a ton, right? So if you have all of the pieces, you can see the star, but otherwise you wouldn't know it's there. They break this, right? It's now bullish, okay? And they've left all of these guys, these sellers, these aggressive sellers that we got the hint that they might be getting trapped. They all got left behind. They're getting squeezed, right? What do we need to do to sell? First of all, we don't take the aggressive sell with the volume. We do not sell that, right? We expect what? We expect them to go a little bit below them, a little bit above them, and then work out that area and eventually choose a direction. It might not happen right away, but that would be normal for a high volume area. And then we have to see some divergence, and we have to see some trapped buyers before we consider selling. Because now this is no longer balanced, it's now bullish. It's staying up above the neutral zone, and when it comes back into the neutral zone, it's rejecting it and going higher again. So until that changes, we're not interested in shorting at all. Or I'm not anyway. Okay, so we do get a short signal here. Am I taking it? Well, we do have divergence. See that? That's one piece of the puzzle. It's not enough for me to get short, but it is enough for me to stand back, to like lay off the aggressive continuation trades. So they may be preparing to pull the market back, but keep in mind, we never tested under this big seller. So chances are they're going to come down here and they're going to make a divergent low, and then it's going to go higher. Let's see. I don't remember. So they do the judo flip, right? Now, once they've gotten under the 50 line, so you could have been brave and short this. It's not wrong. It's just aggressive because you did have divergence on both of the indicators had lower highs and the price had higher highs. And then this guy was an aggressive buyer at the very, very top. So if you're aggressive, if you're aggressive yourself, as soon as he gets beat, you follow him through. Now, I'm finding that when you have these orange bars that are purple and the green bars with the pink wicks, they're really quite easy to trap. And so I'm going to do some searching and see if green bar, orange bar, or green bar followed by star down, or green bar followed by diamond down, when it's a pink on the outline, it might actually be worth taking the aggressive trade. What I've been doing, and I think is fine, is figure out where all the volume was on the way up, which is there, and then expect this little high volume micro composite to tell you whether or not you should be balanced or bearish, but to assume that they're going to try to save that level. So in general, that first sell is probably not going to be very successful. It's probably just going to test this guy. Let's see. Yep. So see how he came back in and tested this guy? Oh, sorry, this one. And couldn't get under him? It's really hard to be bearish when that happens. What's probably going to happen now, they come back to this high volume node, we trade slightly above it to take all the liquidity, and then they make a decision, because that's just how they roll. Right there. That would be my first opportunity to short. Lower highs on the indicators, right? We went under a big volume, and then, or did we? Didn't quite get under it, did we? Not quite. Maybe just a tad here, but we went over it. We came back to test it. We took the liquidity. You know what? If we didn't get under him, I don't think I can take that short. And the other thing is, we have not broken underneath the zero line. Not a short. I'm guessing this fails. I actually don't know. Look at that. That's cool. Okay, neat. So now we've broken the zero line. See that? Just barely. Let me zoom in so you can see. So on this time frame, we have broken the zero line. See that? So that tells me that it kind of confirms that the divergence I'm seeing is probably real and isn't just going to get spiked. Also, this star here getting tested behind and then immediately rejected is often, just like this one, it's often good enough. An aggressive trader who gets beat and then comes back with the same exact signal, it usually does get 10 points. So chances are I can at least scalp this short. I guess there's no star on it, but it's got an arrow. It's an aggressive signal after the star got stopped out by a point or two. The orange on top is just a sign of divergence, but it doesn't work very well. It's just Sierra Chart's divergence detector kind of sucks. So, but it's all we have. Now look, this low is very close to the low we're at now, right? So if you want to know where your risk reward is, whether or not you have risk reward, you need to look where this low coordinates with, which is this one. And you have to be realistic and think, is there a chance I can break that low because on a one impulse move? Because if it's really far away and I don't think I can get there very easily, chances are this trend is not finished because it's just going to make hidden divergence when it approaches it, right? So I would say it's doable. I would go ahead and short that personally. And I would try to see if I can get underneath this guy and see what happens. So let's put a level right here at that low. See how he went just a little bit lower and then immediately rejected. I want to see if they can get under that guy. And that'll help me decide if I want to stay bullish or stay bearish or if I should expect some consolidation. So they, oh, that's interesting. That was a gap. Oh, this is the open. Beautiful. Okay, so this is where they opened. So they were trying to break down at the open. This is how we opened. There's definitely no buy signal here. The only short was this. This one wasn't good enough. This one was. The arrow was a good enough short. Okay, they make a divergent low. See that? They traded underneath this, and they made a divergent low. They did purple bar, green bar, which when it's bullish is a pretty good buy, and they could not break our green line, yet they made a lower low on the indicator. That is hidden divergence. So it's what they're going to do is they're going to come up here and grab that liquidity. So if you were in this trade, that's why we take profits at 10 points, because when it doesn't continue, it's going to come get your stop. We saw that on the video, the live trading video I did. Now notice there is a lot of aggressive volume here. What does that mean? It means this blue line is probably going to get tested. And then there it might be after we test beyond them. Let's leave that 11,485.75 there for a minute. I want to show you, we have one other way to find a level, and that's when this red line was taken. I don't think we did that. So that was taken right there. So that's very close. Let's just move that level. It's very close. So we're going to move it from this to here, and we're going to color it red. And we're going to say if we get under that and we develop volume under it, the whatever bull move they're trying to do has probably failed. And then if they retest it and reject, it's a good short. Plus, if they give it up, but then they retake it and later on come back and test it and bounce, it's probably a good long. So, and you can see how to do that in my stream from yesterday. So where was I? Rejected, right there. Okay, so like I said, hidden divergence. It looks balanced now. See that? We're spending all this time in the midsection, the neutral zone. The problem here with buying is that we have not broken the midpoint, the zero line, and we got underneath the neutral zone here. So now it's right at the open as well. This is like 2 seconds after the open. I just don't usually trade the open, but you're going to get some really weird signals around here because there's just so much volume coming in and new participants. So I personally wouldn't have bought it, but if you were bullish and you identified this as a higher low in a trend, purple bar, green bar, or purple bar, diamond on a higher low works a lot. Okay, so it's not wrong to buy it. It's just aggressive because of the time of day. They do break over the midpoint. Okay, by the time they do it though, look at where we are. We're way up here above this volume. So I wouldn't personally buy it like a breakout, but I might buy a pullback now. Like now that we've regained that volume, what I would sort of expect is that this guy's going to get tested and they might try to bounce it. I just don't know if they're going to give it a chance, right? But look here, we're making lower highs compared to these highs. So I really don't want to be aggressive and chase this, okay? Don't do that. Just because the signal looks the same, it doesn't mean it's going to work the same because it's not in the right location. This is breaking out and with a volume shift, but the volume zone oscillator shows us that they're actually working really hard and they're not producing any volume. They're getting all of this movement, but there's barely any momentum behind it. So if it reverses, it's going to take this back very easily. And there's the judo flip, right? So volume shift up immediately followed by volume shift down, super powerful. It usually produces an impulse move, but that impulse move is really hard to continue. In my experience, you get one big scalp from this, and then at least a 50% retracement. So let's see. Oh wow, do they save it? So that's bullish. It's just weird. Okay, so they're gonna chop around in the area, make sure everybody's out of the market before they let it go. If you didn't short this one's great. Right? See how oh, I guess it is a lower high. But all of the indicators are going down. You can see we got underneath the zero line and rejecting off of it. And even though the buyers tried to put in a higher low, it couldn't break the high and hold above the high. There's also an LVN above us from the profile. There's all sorts of reasons to be bearish here. It's just a question of which one you want to sell. Do you want to be a little more conservative and wait for the retest, or just sell the breakdown? So it looks pretty bearish at that moment, right? Now they come in with a huge volume candle with aggression and a momentum shift. They break over the 0 point. Like the bulls are basically calling the bears bluff here. Okay, so if you short this, you can be pretty sure that this is probably going to stop you out. Because that's not what we should see if that's bearish. Okay, like that's not what I would expect. Look what they did. They made a higher low on the indicator and a lower low on price. So I'm probably flipping and being bullish here. Because now it looks like higher lows and higher highs. They're probably going to take this. This is why you don't trade the first 15, at least not the first 5 minutes, right? This is the kind of choppy action you get in the open. They do take the liquidity, makes perfect sense. Not what I expected, but like I said, in the open you're going to get all sorts of crazy signals because people are fighting over a big number of contracts. And so now we get what's it called? Capitulation. So a short squeeze, which looks like the volume zone oscillator getting stuck above the yellow. We can go back and see where we got above the yellow, which was right here. We already have a level nearby there. So we're just gonna, we're just gonna try to, if it'll let me grab it, just adjust it down a little bit. So that's our new line in the sand, okay? It doesn't have to hold like a brick wall, but if we give it up and if we trade under it and then we come back and we retest it, reject, it's probably done going up for quite a while. Because this is a big, look at all these guys are gonna get trapped if we get under here. Okay, when we get these capitulation moves, especially after these little, see this little, what do you call this? This wiggle, right? This, whatever you want to call that, what usually happens is consolidation, 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 steal a stop and run. Now, thankfully, in the trade and perform room, that's a trade entry, right? That's called a trap back in. But when you get it, when you get the trap back in after this little wiggle, and you expand one way only to juke the other way, and you get this big extension, the only way you can fight it, in my opinion, is you want to see divergence on the indicator, or you want to see a clear sign that sellers gave up, followed by a volume shift lower, which looks like pink bar, orange bar. And it needs to be really far away from your most recent resistance or most recent LVN, okay? Because it's a really aggressive short, but if you have a location here, which I did, I have a voodoo range level here, right? And I actually sold some of my calls, just not all of them. I probably should have sold all of them, but I only sold some of my calls from overnight that I bought it near the lows yesterday because of this signal. We got so far removed from where price has been, right? We got above this line and just extended. They capitulated, sellers gave up, and then suddenly showed up with aggression. And you can see that we dropped back down underneath the yellow line. Now, if you don't want to be aggressive, don't short this. Wait for a retest after the breakdown. So watch. It's because you can get your stop stolen. It happens, right? They get another sign of aggression here. Here's your breakdown. Right here. And see how this broke down underneath the zero line, right? As did the MACD histogram. So that's when you know for sure that range is expanding, probably to the downside, very likely to the downside. But look, you've got the last low down here, which was way back here, right? And now you're making a lower low. So this is hidden divergence. If they bounce it here, it can actually go higher. But if they can take this low, buyers are totally trapped. And you just don't know if it's going to cut right down or if it's going to come back up. And sometimes you just don't get another chance to short it up there. Like what you really want is breakdown, retest, extension, right? That's like the easy trade. You just don't always see that. Like you're not always going to get it. It's just the way it goes. So they try to. There's no reason to buy this. This is super bearish, right? We saw something kind of similar at the end of the day. And note that they do the wiggle, right? Wiggle, 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 wiggle. They stop out this guy by going just a little bit higher and then drop it, right? So there's a trap here where they go higher than the previous high and then boom. Look at the volume zone oscillator. It's having a hard time staying in the neutral zone. You think that's bullish? No, it's very bearish. It's not even balanced, right? Super bearish. You can short pink bar, orange bar, pink bar star, pink bar diamond. All of those continuation trades are going to start to work again. But this is short, right? They got a big guy, big volume. They tried to do a momentum shift with big volume. He immediately gets beat by a diamond. It's a short. It's aggressive because you're shorting at the low or in the hole. But look, we've broken that low now. See? This previous low, it's no longer bullish divergence. And look how they're rejecting this neutral zone. It's not bullish. Do not buy no matter what. I do not buy that. I don't care if it's the low. Right? I don't care. Just don't buy it. Just wait. Right? If you shorted this, it's so aggressive that you'd probably want to give up here. We've also gotten underneath a level that we identified from earlier as important. But we have not put an orthodox close below. The only low down bars have a high that touches the level. That's a problem. That means the buyers are trying to absorb it. So we're probably going to get neutral here. Oh, unless they, there it is. They got pink bar, star, and then orthodox close below. That's bearish. It's not ready. Do not buy. Don't even think about being bullish yet, in my opinion. Pretty sure. They're probably going to reject this. Oh, interesting. They get purple bar, volume anomaly up, trapping back into this one. That might actually work for 10 points. If not more, let's see. Oh, that's it, isn't it? That's it. So you got a little scalp here. If you wanted to be really aggressive and take the first trap, even though it was super bearish, you could have gotten 10 points. But really, we should not expect that this high gets broken. Okay, so yeah, very aggressive trade. Do not be bullish just because it works. This would be an aggressive short. I probably wouldn't take it, but what happened here is we got an orthodox close below the red line, a retest of the red line, and a rejection, right? So you could take this short just based on the level and looking for aggression at the level. So that it's you know, you're shorting low a day, which is really hard to do. This one, right at 9 o'clock, there was what's it called? Econ at that point. So usually not something that you have time to buy. Like this move is gonna happen so fast that you won't be able to react to it. That you can see that there's some divergence on the indicators. We're making higher lows on the indicators and lower highs on price. So it's a hint that the aggressive buyer might get a little bit of a lift. The other nice thing is that this move was big enough that you have more than 10 points back up to the resistance again. So that would be another reason to consider being a little aggressive here. But the problem is we can't break back into the neutral zone on the volume zone oscillator. So I have no reason to think it'll work. But we did have a level down here. So if you're just a location trader, maybe it makes sense. And it works. Like, locations are good. I just don't usually trade them blindly, you know. But if you bought, look though, this is 1 second, 2 seconds, 4 seconds. You would have had to basically be ready with your buy at the level and your stop 10 points below it or something. Is the only way you catch that. That's just, it's econ. But it's just interesting that it happened at a level that we identified off the higher time frame earlier. So let's see. So now we get another bearish divergence on both indicators. See that? Bearish divergence. This MACD needs to be shrunk. Oh, no, not like that. There. Bearish divergence on both indicators. Okay, so that's and so if it's bearish and you get a bearish signal and the location's right, and it's right at the Levine node, right? That makes sense to sell that. See how they can't get over it here? And they return to it and reject it with an aggressive signal again. Triangle up followed by star, or triangle up followed by an arrow, or triangle up followed by a diamond to the other direction is a pretty good trade setup.
There we go. Yeah, so it rejects out of there. Okay. Look at the volume zone oscillator after getting the divergence and giving us the hint that it might be a good time to short. It goes back underneath the zero line, right? But look, when it comes down here and we see a sign of aggression, it did not break underneath the neutral. And this is what I missed. I believe that this is a sign that we're probably going into expanding range balance. If it was going to take out this low, it probably does not save the midpoint here. So you don't know for sure yet, but if we take out the midpoint without getting down here, it's probably balancing and the low is probably in for a bit. Okay, they can't do it, but remember these high volume bars usually get traded above and below, and we have one going up and one going lower. So this zone's probably going to get tested, and this zone can get tested. It's a really good time just to wait. There, that's the one you buy. After they test below it, buy the purple bar, green bar, target 11,498, and take advantage of this big distance, right? And try to get out of your trade around here, or at least most of it. Right there. I'm probably out of 7/8 of my trade there, right? And that's why, because they just reject it as soon as they take this liquidity. Remember, it's balanced, right? The difference is it's not consolidation balance, and it's not sideways balance, it's expanding range balance. So you want to buy under lows and sell under highs. So this was a high, so you could sell this, and then this was a low, so you can buy this, right? That's how that expanding range balance works. And look what it looks like on the indicator, right? It's bullish up here, and then it's divergence, and then bearish, and then possibly a bull sign right here if they tap that and bounce. So if you bought this, you could hold runners. I probably wouldn't because it doesn't look very bullish to me. But if they can't get under that green neutral zone and they throw another bull sign, it's a buy right there. See that? Comes back into it. Pretty sure that's close enough. No, it's a higher low volume anomaly with aggression. We've talked about that sometimes these get tested below, but if it's a higher low, it's really hard to do that. So that's probably okay to buy. Yeah. Sweet. Okay, so that's something I can watch for. So now we've had range expansion, which is what we expected, right? But it's balanced to bullish because we have this high over here. We need to break this high to confirm that it's bullish, and that did not happen here. We did not break the high. Now you wouldn't know that until it started to break down. You wouldn't. These little flags don't show up for about 2 more bars. You don't know that that's the edge until 2 bars later. But look what happened on the indicator. It came above the red line and then fell below it. And we say that when that happens, you can mark the point where it crossed, which is right there, which is basically the voodoo range level, and actually where we are right now at 11,498. So if we give that point up and then we retest it from below, it's probably done going up for a bit, right? It does that. Oh, it gets under it and they save it. Purple bar, green bar. So when they save it, that's a scalp. See how they can't get under the 50 line? They can't get up the 0 line? That's a scalp long. Higher lows, still bullish. We got to break that high. We got to get up there. Right? So you can buy that if you want. It reverses. Right? So you probably get 10 points. And then your runners. Oh, nope, it stays. And it breaks the high. Sweet. Okay, so that one works. See why you don't move your stop to break even though? You get 10 points. It comes back into your break even and bounces and gives you the move you wanted. Right into the low volume node. Perfect. Like picture perfect. It just had to come back to your buy again. Right? So if you bought it here, the better move is to actually buy more here, not sell at break even. Buy, take 10 points. When it comes back, buy again. Right? That's what you really want. And in the room, we call this move the supernova because what happens is we put in a low, particularly if you can get underneath the volume zone oscillator like this, or you have divergence on the MACD like that. That low becomes a really good one to set up supernovas. Okay? Even though you had divergence here, which would normally make you bearish, seeing that divergence here turns things around And so that trap becomes pretty good. And then when they break this high and close above it, now higher lows are good to buy or traps are good to buy. I missed that when we reviewed it. I saw the trap, but I don't think I actually saw this divergence. So that makes this trap much better. I did see that this should be bought because it's normal for it to test below it and then test above it, and see how they then test below it again. So this is what's called a head and shoulders trap. So you've got left shoulder, head, right shoulder, and this right shoulder tested below the left shoulder but closed above this low. See that? That's higher. So that's actually a pretty good trade as long as it's not super bearish. And when I say it's not super bearish, it's like you have some divergence, you have a sign of range expansion, you're not up at resistance, right? But then that becomes a pretty good trade. So that works pretty well. It works better when you've broken the left shoulder high. If you've broken above that before making the right shoulder, it's so much better. You don't really want it down like this. You want it to go up and then come back and then rock it. So if you get in here or get in here, it's not wrong to hold runners to try to break this. In my opinion, it's okay. I made a mistake here and missed the next, I believe it comes up right here. I missed the next read, which was that I thought it was bullish because of this move here. I thought, okay, this is probably the low for now, and we're gonna attack up here and push higher a little bit, which was right in the short term, right? But what I missed was in the long term. Look, the divergence on the MACD and the divergence on the volume zone oscillator, it's going lower, right? These highs are getting lower, even though price is getting higher. That's a problem. And it's really common in expanding range balance. And even though the majority of all of the trading is happening above the zero line here, see that? It's all above the zero line, which is, I said, is super bullish, and it is. That divergence means that the dips need to, you need to stop buying the continuation dips. You can't just buy a dip because you think, oh, it was bullish before. Not if there's bearish divergence. Okay? Once you don't need to sell this just because of the bearish divergence, but you should probably not buy, well, see, this one's got bullish divergence. So this one's okay because it made a higher low on price and a lower low on the indicators. So this one will probably get you 10 points. I think it does. Oh, it doesn't. Interesting. Why doesn't that work? Let me think this through. Did I miss this level? Oh, I might have missed something. When did we break above? Oh, it's the Buddha range level. That's right. I just didn't mark it. Did we get under that? No. We saved it. Went higher with bullish hidden divergence. But we had natural divergence on the higher time frame. What does the higher time frame look like? Oh, shit. The higher time frame looks bearish as AF. Look at that. Volume shift, volume shift, volume shift. This one they tried. They've got the volume anomaly. They traded above it. They're going to trade below it, right? They tried to trade below it and they immediately rejected, and then they put in another one. When you get two in a row like this, that's almost always a sell. Just like when you get two in a row at support, it's almost always a buy. Like this. Two of them in the same spot. That's just a guy who's not giving up, right? He's got a lot of money and he's not giving up. So this one is worse than this one. Oh, I see the problem. The obvious problem isn't just the divergence. It's that the bigger picture, we are at resistance. This is resistance. So I bet on the bigger picture, let me see, when did we break above the red line?
right there. Just below, right there. That's where the line in the sand was. Color it red on that time frame. Ooh, it's hard to see. And we capitulate above it. We get below it here and immediately reject it with aggression. It's bearish as long as that holds. See how they can't break over it? And they're already getting a volume shift down. So it just happened a little bit lower than you'd expect. They just couldn't make it past that. Is there any way that I'm marking that too high? Unless you want to put it here, which is this. That's that previous high volume node. Whoops. Ah. Shoot. Look at that. Pink bar with VPOC above. Lower. No VPOC above. Pink bar with VPOC above. Lower. VPOC below on a bearish bar. This is the orthodox close below. Any retest of that white line should be sold if it rejects. Okay, well, it doesn't do it right away. And see, that's the problem with having it so low. Okay, so now that doesn't quite work how I want it to, so let's take that out. Those high volume areas are usually not brick walls, so it's usually not how I do it. Okay, so where were we? Back here? Right here. So I think the problem that I have to see is that the resistance is right ahead of me. And like I'm fighting this momentum shift, and resistance is right here. And so even though this is a higher low, and it's bullish hidden divergence, even if it works, it's not going to give me good risk reward. And this is really extended. Where was the volume? At the high. Shoot. And where's the volume here at the high? Damn. So they got a VPOC on a bearish bar below the volume up there. The high volume node, if you want to think about it this way, the high volume node for this is now here, and they have shifted volume below it. And so even though this is a purple bar followed by a green bar and a volume anomaly, which is usually pretty bullish, they're trying with all their might to buy right into the high volume node. And even if they do it, we should expect them to reject more often than not, because they've already developed volume below it here. They try to get it, they reject, that's the short. Yeah. Now we're just below it. They're trying to save this. It did not trap on this one. It trapped on this one, though. This is the one I took. I actually bought this. My thinking was we basically defended the 50 line, the 0 line. And I thought, hey, if we're staying above the midpoint and I'm getting higher lows on the bigger picture, it's probably bullish. But I did not pay attention to the divergence and the fact that this to this resistance is not very far. And it stopped me. Pink bar, orange bar was the short. Yeah. And then you could have technically taken this one on by mistake as well. It's basically the exact same thing. It's the volume anomaly. But once a volume anomaly has been traded under, remember, the next thing you'd expect is for it to be it's traded above and then it's traded under. Now it's resistance, right? So if you want, once they get beat, once you get under them with a VPOC like this should be resistance. They happen to get an aggressive buyer in there, but look, it gets immediately rejected. That's your trade. So where I was buying, I should have been shorting. And the thing that got me mixed up was seeing that once they broke above this 0 point, I was thinking if it's bearish, we should be breaking down under that midpoint, so therefore it's bullish. I unfortunately don't think it's quite that easy. I think it's bullish if they hold this, and that you might get some tests down here, but that then you would need to immediately break back up over and back in there if it was bullish. And so the problem starts here, right? So when you get under there and they save it at the 50 point, the 0 line, you'd need to identify that this is just not the kind of place you want to be getting long, because resistance is right here. And when they do reject it, that's a short signal. Like I know that's short signal. It tests above it, comes back to the midpoint, comes back to the neutral zone and stays in the neutral zone. It doesn't have to immediately reject. It can hang out there for a while. This is another one. That's a known short signal. Test of that neutral zone high and rejection. That's a short. As long as the volume is above you, that's a short. The hard part is it doesn't actually extend on the indicator until here. But here it's far too late to short. And in the meantime, you might have bought this and this and this if your indicator for being short is get under the midpoint. So you can't really wait for the midpoint break if you've got the divergence and you've got volume above you. Okay, I can adjust that. I can adjust that. So I can roll with that. That kind of makes sense, actually. It's the same reason why this is a buy, right? You got under it, you traded above it, and then when you tried to come back, well, they got under it again, but then here they bounced it. They got to the 50, they got to the 0 line, and here you don't. Oh, yeah, you pretty much know they're going to break the 0 line here, but even if you didn't, and it took a while, it's probably still long. Well, the same exact thing is true up here for the short. If it was bullish, it would have stayed up here. It rejected and rejected. It's making lower highs, right? You don't want to do continuation higher. Trades that are trend trades to the upside, you don't want to be taking with lower highs. You need higher highs. So the fact that it broke up here and then it's making lower highs, that's a problem. Okay. That makes sense. So in other words, for the supernova, for the big trade, the swing trade that sets up here for the one that was the head and shoulders, you could buy this right shoulder, and you could even buy the dip. The once you break over these here, you could even buy the dip here, and that's okay because you have this high up here to still target. But once you've broken that, there's no more targets. So you break it, and now there's no more targets. So now, oops, I took away all of my things instead of some of them. So now when you make another attempt, it just falls, right? So again, let me just put this back. Oh, it's this one, and this is that one. Right? Is that the one they break over? No, it's the second one. I had that in the wrong spot. So break under that, retest it, and reject, and you have a short. Hard not to take that. And that might just be a stop. This one is good. Okay, I had it in the wrong spot. Cool, so that would have helped me not take this, because I see, it's purple, purple. And I trade above it. Try to bounce and it fails. Then it tries to save it and I can't buy that. Shoot, that's hard. It's just tough. It's a weird pattern. So they try, and finally it works. And it's interesting that it works only after getting under the midpoint. There's no divergence here. Why does that work? I'm not even sure why that bounces. Well, whatever. You don't need to catch every move. They bounce it. They break this high. Higher high. Oh, they put in another level. Wow, right at the top. So now, break down under that and retest it with aggression, and it's a short. So I'd probably miss this one. That's range expansion. You've got yet another level put in right on the star. And now we're going to get choppy because we have two levels near each other. So I believe we bought this trap. That was a fair balanced trade to long that, right? Even though you got underneath here, you haven't rejected the midpoint yet. It's not necessarily bearish. It's just expanding range, right? Just like this wasn't necessarily bullish, just because it got up here, it would need to reject the midpoint to be bullish. So it's not. It's just expanding range balance. But look how they treat these new levels until they get rejected. They're not. It ignores them. Trades above. This looks like capitulation, right? We have a level right there at the pink to mark. Get under that and retest it from below, and that should be rejected. This is a higher time frame level. Oh, we have another one. Wow, it's like all over the place. Another one here at the Buddha range level. If we give that up, it's also rejected. So see, this is all short covering, and they're losing steam. They're getting lower and lower highs on the indicators, even though they're getting higher highs on the price. And we've seen this work before, right? That's a short. And I just have to be a little aggressive about it because the shorts don't always retest. Now that they've given up this level, if it comes back to it and rejects, it's a short. Same thing with this red level. And now same thing with this white level. So I can't be buying this just because of the flip there. It hasn't even gotten back to the neutral zone and it fails to do it. Then it rejects, gets underneath this level. So they gave up all these levels stacked on top of each other. Big problems for bulls now, right? Just absolutely creamed. Okay, notice now they got underneath this. So now we have more levels we can add. All sorts of spots where we can start watching for trades to develop. It's this one right here. It's the same level. So, okay. So we don't buy that. There's no reason to buy it, as far as I can tell. That's technically a trap off the green one. You could try this, and your target's back up here towards one of these levels. I think we took that, and I got out here. That's just divergence. And, like, just too far away. It's just such a big range expansion that you know you're going to get, like, at least a 38.2% retracement. Probably a 50% retracement. Pink bar, orange bar, divergence, sell it. Okay? Get a little bit. They turn it around here. Kind of surprised this worked. What happened here? Oh, they couldn't get VPOC below this lower level. Jeez. Weird. They're staying neutral. And they bounce it. Interesting. I was not ready for that. I was thinking since they didn't break above it, that's probably not bullish. It's probably balanced. And that balance means going back and forth between the two. But instead, they rip up here first, then give you pink bar, orange bar. So I guess it's just bullish because it gave you a green bar at the level that we were looking for, and it couldn't trade below it. So that's a scalp. And then this is the same exact thing in reverse. That's why we scalp lower. Yep. Lower. Same exact thing. Star right on the level. I guess you just buy it. Wow. And so when you get these levels close together, it does get choppy, but you can trade from level to level. That's cool, actually. So that was lunchtime. I didn't take any of these, but some people in the room did. And now I see why they would work. So that's useful. Note here, they tried to reject the midpoint and then gave it up. That's usually bearish. I would think that would mean this doesn't work. But it's a green... Oh, and it got an orthodox close below the level. Let's see what that does. Wow. It works. So it's just still balanced. So these when you get all these stacked levels, you really do need to trade under all of them or over all of them. Yeah, see, so I was like, we were zooming in, what's it called? Like trying to analyze this choppy zone, but you can see that it's just got so many levels and so much going on. There's just no reason to trade anywhere in here. Basically, you just want to buy the signals out here and sell the signals up here. It's like, it's actually easier than it looks. It just doesn't matter what they do in the middle, right? Even though they got underneath here, they immediately reject it with the sign of bullish aggression, and it just rocks. So all you had to do is just buy this level every time they tried to buy it, follow them in. You get range expansion here. You get more levels to add up here. So this one shifts up. I wonder if this one's gone now. Yeah, they don't care. They stay, now they just squeeze into, wow. So they wrecked that. Stop him out. Oh, it's the big volume again. The big volume usually gets traded behind, right? So it goes down first, trades behind him. This becomes the pivot. Dang. Okay, I'm gonna have to code that in somehow because that's pretty neat. I've seen that a lot. So you beat him. Wait, did that happen over here too on the other direction? Hold on. Up here. Where was that? 9 o'clock. This guy got beat. Right? We got under him. He becomes a pivot. Oh, okay. 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 So, and they try to save it and they fail. Wonder how long that's good. It works again here. And here. Wow. Another seller off that area. Only when they get above it. Now this one is the pivot. Yep. Jeez. Okay. Cool. So once it gets directional, unidirectional, and you get stuck up here in the indicator, now that trapped seller is a pivot point. That might deserve an indicator, you guys. I might have to rebuild. I might have to build that in. That's pretty cool. So extension, get over him, beat him up, come back, test his zone, and bounce. That one was a blue square. I thought I saw an orange bar out of it. Yep, orange bar. Yellow square worked. Yellow square worked. I might already have it. I might just have to make a little tiny adjustment to that yellow square. So this guy doesn't get beat. He does not become a pivot, but this guy does get beat. So he does become a pivot. This guy gets beat, and this guy gets beat too. Can I move it down here and use the most recent one? Let's see. Oh, interesting. Only purple bar and pink bar gets a trade through it. Blue square at the bottom of it sends it through. Blue square at the top of it sends it through. Okay. Neat. I'll take it. That one didn't quite reach it. Did another one get trapped? Oh, because this one got trapped. Now it reaches it. Okay. Okay, so anyway, divergence at the highs. Divergence, divergence. I said it wasn't good enough for me to take, but it's technically this pattern is a 3-bar pattern, and it's not bad. It's okay. Good short. Didn't take it. Comes down to this level, makes a higher low with the volume anomaly. I do not believe I traded that. It's technically valid. You just have to be not bearish, and I think this move freaked me out. I thought because we had divergence here that I couldn't be buying, but I think the way to think about it is don't buy into that. So if I move this pivot, I doubt it keeps working. If I move that pivot instead to wherever the buyers were, which is basically this zone here, right, and above, that's probably where I don't want to buy anymore. But buying from way down here should be okay. They come back into these levels, they try to reject it, they try to buy it again. Okay, they can't beat this guy. See, they get behind him and they immediately reject. So they don't even get to test this. It's just bearish. Comes up, tries to test. That's your rejection. That's your sell. The yellow bar that corresponds, it's another yellow square that corresponds with this one. That yellow square. This one fails. This one works. And this one works. Wow. Cool. Okay, look, this is another spot that I was getting confused on earlier today. We have another volume anomaly, right? And the question is it buyable or not? Now remember, I bought this one, and I'm not sure I like it anymore, because it's just chop in here, and so I'm taking advantage of the range and just trying to buy. But really, then I should be buying it lower, and then you'd think this one would be the one to go, and then you'd still target the same area. But here, the pink bar star, pink bar diamond, pink bar, all of these, this signal here is really strong, and they're rejecting the neutral zone. And so this is coming out of the bearish oversold area, and your best case scenario is getting back to neutral, to midpoint here. And so that probably doesn't work very often for 10 points. That's interesting. Even though it's like a double bottom here and it's a trap, I don't think that works, does it? Nope. But what does work, when you test below it and find another buyer and you had divergence. See that? That's the one everyone in the room took that I didn't take. I saw it and I just passed on it. But again, the easy way to think about this is find a seller that got beat, which eventually is going to be this guy. And if you get a blue square in there, you can probably buy it. So if you didn't take the trap, you don't sell this, you buy it. Let's see if they've set it up. Oh, they've just done it now. So we didn't beat them. We didn't beat them. So they're still working this out. It's actually not bullish yet. They put in a higher high. They closed above this. That's a supernova. It's just really friggin' choppy. And I don't like how this low is not far away from the chop. This looks like tight consolidation. That's just basically, look at how most of my trading volume is inside the neutral zone. So I'm pretty sure the way to trade this is you sell this and you buy this until otherwise, until something else happens. We just trade the range back and forth. But on the higher time frame, I bet it's bearish. So many freaking lines I don't even need anymore. Wait. Erase all these. There. So the colored ones matter, the green and the red. The little ones from the smaller time frame won't matter because that was all during chop. Right? All of these levels that I took are in that chop zone. So that's like the high and the low of the chop zone, right? But it's not the level I actually want to be buying and selling at. I want to be buying at green and selling at red. That's actually not that hard. I'm making this so much harder than it has to be. Look, I'll show you. Okay, so on the higher time frame, we identified the red level and the green level as being important based on this day's moves, right? It's based on this time frame, the 40 tick, when they capitulated above and then when they capitulated below, right, on the higher time frame. So when we then zoom into the lower time frame, they're not going to immediately be useful, right? You can't just sell it right here. Like it was created here. You can't just buy this. You might be able to sell it once they give it up and retest it, but it's gotta move and then retest and then reject. So it would have to get over it, reject it, and then bounce, or here under it, reject it and bounce. But now look what happens. They start to bounce around inside, and so these buys are going to work. And then if we can get over it and follow through it, these sells are now going to work. So buy, sell, buy. And then if it goes all the way up here, sell. Okay. I mean, honestly, you guys, that's a lot easier than I was making it. You know, now you can help build your confidence by saying, okay, I'm going to ignore everything that happens between that green and that red line. And I'm only, here, we'll do it on Simon's because it'll be easier to see. If you say, I'm only going to take star or green entries on the buys at that green line, and I'm only going to take orange bars or stars on the red line. Well, you might, like this one was so far away and it's on this white line that you might take that too. But other than that, you've got nothing to do all through here until you get the green line developed. And then you've got this buy here, green off the level, star off the level, buy. For these are just little scalps, right? Green off the level, buy. Targeting back up here to like the orange. This one didn't trigger, so I'd probably skip it on Simon's, but on mine I got the diamond. And of course that one's the one that goes further, right? And then you're really not selling until you're up here and you get a rejection. So that's the sell on the star. That's the buy. I got a diamond, but Simon doesn't have the diamond turned on, but that's the buy. You do nothing here. Nothing here. Chop, 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 chop. Do nothing, do nothing, do nothing, do nothing. Buy that one, which was a diamond on mine. Buy the green. And that's where we are, right? So on my, with the extra signals that I've added, this has the diamond, right? This has the diamond, and this has the diamond. So I knew from my signals that that's a valid entry, but you could literally just have bought every time it tested that level so far, and it's just working. Like, just as a location. And like I said, all I'm doing, that level is very easy to find. I'm just taking a higher time frame. I'm looking at wherever the volume zone oscillator got overbought or oversold at the red level or the yellow level. That's all that is. It's just the point where everyone got really, really heavy volume at the edges. Right? And that was developed back here. See how deep it is? And it's got divergence. Right? So that's the buy. That's the trend buy. But now once it starts to consolidate, you just wait for that level to get tested and rejected. Right? Over and over again. Just keep buying it till they give it up. And then if they trap it, if they get under it and they jump right back into it, you don't even need to, like here, you don't even need the diamond. You just need to trap under one of these and close back inside, and you can just buy it anyway. And that's what people did in the room. Like they don't even have the diamonds because you don't need them. Look. Instead of looking for the stars and the green bars, instead, if you said, okay, I'm going to find all of these little blue triangles and I'm going to mark them, and if I trade under them and then immediately save that spot, I'll just buy it. So you buy that one, and you buy that one, and then you do the same thing here. Oh, so that hasn't happened yet. So if it got under this and it traded back up, you'd buy it again. Right? And you just have to know that like that level is going to be good until it's not good anymore. And then the same exact thing can be done on the top where the red is. So it's developed way back here. That's kind of neat. It's developed way back here. So now here's a high, right? If I develop above that high and then reject it, I can probably sell it. That one was just a lower high. That one didn't really reach it. If there's a low volume node below it that's acting as resistance. Okay, so see, there's no trap here, right? There's nothing to do yet. So this went higher than it. We haven't really spent a lot of time at that red level. Right there. So if this would have trapped, I would have sold it. But they went a little higher than it and then gave the signal up there. And I don't think we reached it again. We didn't. So we're probably headed up there. And if we get a little trap or a pink bar or orange bar or whatever up here, I'll probably take it. But I think the moral of the story here is rather than trying to micro-analyze every one of these little moves, just identify the areas that you're willing to take a trade based on the structure and just wait for the signals to happen there, right? Wait for the trap trade, wait for the 2-bar combos like the pink bar star, wait for that stuff to develop at the level that you want it, and just skip this stuff. Like totally ignore it until it gets to your level. Because think about it, like let's say that you bought this one, right, at like 98, your stop goes at 81, right? So like it's a bigger stop, but look at, you could get all the way up here at like 28, right? So that's 30 points right there. And then let's say you take this one, like you skipped this one for some reason, or even if you did take this one, so 20 points up, then 97, did you get 07? You did not get paid on this one. This one would have stopped. So now you are up 20, and then you lost how much here? If you got in at the very high possible, you got in at 98 again, and your stop goes at 78, let's say. So, is that right? 98 to 78? Wow, that's a big stop. How did they get a 20 point? Wow. Okay, so I guess you're break even then. They're not usually that big. Usually they're like 15 points. So then your last one, am I on the 24 tick? Yeah, weird. Really big wick. So here you would get in again, right, at 91.50, and your stop goes under like 73.50, let's say. So that's a little less than 20 points. And now from 91.50, you could have gotten 21.50. So now you got your 30 points back, right? So one way or another, even if you took every single one of these trades and like half of them stopped or whatever, you're still making way more on the ones that work, even though it's not making it to your target. The primary target was up here at the red. It's not even making it there, but as long as you're taking profits along the way at like 10 and 20 points, right? You'll come out ahead, even if you take the stop, right? So the solution may just be even though the indicator and the price action in here, it might have helped you avoid this one, but it also made me skip this one, right? So the better decision might be just buy them all as long as they set up at the level, because it's so choppy that trying to say like, oh, is that a divergent high, or is this really is this a trap seller, is this a trap buyer, like it just doesn't matter because it's just all chop, right? It's all sideways. So all you need is just a sign of aggression at the levels that were identified earlier. Okay, well that's cool. I will keep working on that, and hopefully this has been interesting. Does anybody have any questions? Otherwise, I'm gonna wrap it up and go do something else for a bit. But if you ever, obviously, if you've got more questions, you can always DM me on Twitter at RedBenTrader. If you want to know more about the trade and perform indicator, which is the easier of the two, the one that I started on and then built on, you should talk to my coach, Simon. He runs the trading room I participate in, which is tradeandperform@gmail.com. Is how you get a hold of him. If you let him know you follow me, ask for a 5-day pass, and he will give you it. You can kind of come and check out the room, see what we do, how we use the indicator, and how we all learn how to fish rather than just be handed fish, right? We can run any one of us could run the room and call out the trades, and we'd all see them because we are all trading pretty much the same system. Just some of us have some extra signals, and others of us are very conservative and only take maybe 1 or 2 setups. But it's all based on the same concepts. So yeah, come check it out. And